I'm your host, Effie Pilarino, and today I have the very special pleasure to have with us, Spiros Margaris. Welcome, Spiro.
Thank you very much for having me. It's a great pleasure. And, uh, and we know each other for a while, and it's a great pleasure to be on your show.
Great pleasure for me too, Spiro. I can't believe that I've been in Switzerland now for 7 years, and when I started my fintech journey, you were already up there, with your crowns. And of course, I admire you 100 times more today because I know very well how difficult it is to maintain those crowns as the world keeps evolving and accelerating and so on. So,
But it's something I always say, and we said, which I love very much about this show today, because we're going to make back and forth. It's a community thing, and I think without supporting each other in the community, nobody could shine. And I really believe that, and I live it as well. I mean, I think I try to live it, and you too. And I think that's why I'm very much supportive of all those shows, because we all help each other to bring out the message of fintech
exactly.
change.
Exactly. And we also help each other evolve our thinking by sharing different points of view, by asking questions, by wondering, by trying out and seeing what works and all the angles, the different angles that we are seeing. And as this space is, really evolving, because when we started, I mean, at least when I started, I was just looking at fintech innovations. I was
Mhm.
really sort of in that exploratory quest of which is the best fintech, who is doing a different business model, that type of thing. I'm talking 5, 6 years ago. And then slowly I started looking at, okay, what are the incumbents doing? Where is the leapfrogging happening? And now we are in a totally different space where we know that that war is over between fintechs and incumbents,
Mhm.
right? We know that rebundling is happening. And we also know that it's all going to be about the tech world and how that integrates and rebundles and so on. I think we are there. And I want to ask your feel where we are at in this from the unbundling and rebundling and what has changed.
I think the problem is the more we know, like in every science, the less we know. And I get to the moment now where it's not really clear where we're heading. It was much easier when we met to see the solutions, as you said, the rebundling, bundling now again, and but now it's so more complex. And actually, I find a lot of fintech companies done a good job in terms of doing things the big players should do, but the big players are not sleeping either. So I think. As for instance, a good example is robo advisors. Many years ago it was really a thing. Now it's there, but it's not a differentiator anymore. And I think the same thing could happen to challenger banks if they're not careful. That eventually they're not going to be much a differentiator in the market to choose a challenger bank on incumbent, because sometimes it's like I'll try to give good examples. It's like when my wife goes to the hospital, does she need a sports car or does a normal car do the job? You know,
Yeah.
I guess the normal car will do the job as well. So we have to be careful if we don't really innovate more, because I don't say to claim to know the future, but then people might just fall back to a mediocre solution just because it does the job.
It does the job, yes. And there's always the inertia of changing. And I want to ask you, and I'm ready to confess too, How much
Please.
have you actually personally changed your behavior? And I'm talking about, you know, consumer banking, investing, trading, insurance, the usual stuff that that most consumers in the developed world have. How much have you changed your behavior over the past, I would say, 3 years? Have you
You know, very
moved?
good, that's a very good question. I haven't heard this before. Not much.
See?
Because not much. And, you know, we experiment. I don't want to mention a fintech company specifically, which I use 2, 3 because I use them, because I find value. But yes, not much has changed. Now we are in it. You know, it's, I
Yes.
think, good point. What's your experience?
So as you said, I have, if I look on my phone, I will, you know, there's 3 fintech apps here. There's 1 or 2 of them that I use.
Mm-hmm.
And as you said, it's okay, I can name them, you know, I'm a Revolut user.
Yeah, I use Revolut as well. You know.
But when I take a step back and say, okay, but I haven't moved from the main bank where, you know, my husband's salary is, or where I have my small business account, and none of those are really fintech, right? They're operating in the old world. Okay, I have Twint, for example. There's another one here in Switzerland, and so on. But I didn't shop insurance through an insurtech app and all sorts of other things.
Yeah.
It's very interesting.
You know, but maybe it's also because incumbents, to call them incumbents, weren't sleeping. Maybe they didn't advance as fast as those challenger banks or specific fintech companies to do a specific job. But the difference is not that big, you know. The difference, I mean, because they also changed the user experiences, you know, and the adding stuff. So there's not to jump ship. It's not that big of a reason.
Well, and especially in a market like ours, right? We are in the developed, fully sort of serviced market. So I'm sure that if we lived in Latin America, for example, the impact would have been much, much bigger.
Absolutely. I mean, I also said that my TEDx talk many years ago. I mean, innovation you're not going to find in Switzerland per se, because we're too not hungry. I mean, we're just
They're
so
not
smart.
hungry. But let
But
me
if you're
ask
a
you,
poor country, you're more innovative because you're hungry. You look to save money. You look to have a bank account, whatever things we take for granted.
yeah. So let me ask you another question. I mean, okay, we are not hungry here, but I always think, why aren't we all using some fintech to buy private shares? Why has that not happened in the
In
market?
Switzerland or in general?
Sorry, say it again.
Switzerland or in general?
In Switzerland and in general, I would say. In Europe, I have not seen that penetration.
Maybe we're not equity focused nations like the Americans
Yes,
are.
but you see, we continue to sell mutual funds, right? There's a little bit, I mean, ETF space has grown thanks to robots, thanks to democratization, thanks to all
And,
that fintech.
and young people are buying a lot of Bitcoin. I mean, or crypto. I
Yes,
mean, or at least they speculate with it. You know, it's. I
yes,
think it's.
yes,
I mean, I'm not pushing here for crypto, but I think as we see, it's good that you mentioned shares. I think the more interesting space is crypto because more institutions go into that space. Talking about Fidelity, I mean, there've been already hedge funds, etc. I think and the young kids are also in it. It's very easy to do it through Revolut. There are many sources where you can buy Bitcoin or other digital currencies. And I think that's the hot space. And I'm not pushing here for to buy. I don't own Bitcoin at this moment, and I still can say that. That's why I always emphasize this, because it would be different if I owned it. I should say I own it and I believe in it. That's also fair. I don't own Bitcoin, but I think digital currency will have an important place in portfolios.
Definitely, but
more than shares in the minds of the young people.
In the minds of the young people.
Although they should buy shares.
They should buy shares. The thing is that there's, I think what has changed is the way narratives travel through the digital world that we live in. They travel much faster and they take a life of their own, I find. So the narrative around Bitcoin specifically, and I...
You're a true expert, I have to say, Efim.
No, it's not an expert. I'm more, I put more time in it and I'm more focused on it because I really see that there's a true innovation coming from there. And it's about changing how we manufacture financial products. Whereas, in the classic fintech world, I mean, it's the same products. They are distributed and settled and administered in a different way and in different business models, but the products are the same. Whereas Bitcoin blockchain opened up a whole world and we're experimenting and there's a lot of scams and so on, but we are really experimenting with something new, a different way.
And it forced central banks and countries to innovate faster than they want to.
Exactly. Exactly.
Exactly. And Libra did a good job in that, because that was the wake-up call.
Exactly.
Central banks said, if we don't change, might be too late. That we,
Yeah, Mark Zuckerberg, we should give him credit.
I would say so. I mean,
yes.
I mean, the guy did the right thing to ignite the fire into the space. But just great Jack Dorsey from Square does a great job to support cryptocurrencies, and I think they don't do it for. I mean, I think Jack, who you can also invested in Bitcoin through Square. I think those people, at least for Jack, I mean, I don't know him personally, but I think he does it because he believes in the freedom it brings, and all that. It's not the money. I mean, because he makes money from somewhere else. I don't think the other people who speculate in Bitcoin, that's legitimate. But I see some people really believe what digital currency can do. Take out the middleman and enable, maybe even enable poor places to have a better life. Or Venezuela, for instance, where there was one way of getting out of this super inflation, hyperinflation of Venezuela. But we could talk a lot about this stuff. But I think there are different actors in this business, in our space. Some people are there to benefit, which is legitimate, but some people really believe in the power behind change, digital transformation. I really believe that.
It is true. Jack Dorsey, I did some research recently, and today I published an article talking about 7 universal basic income schemes globally, and most of them either are inspired or are trying to use stable coins or programmable money. And one initiative that I don't think many people know is Jack Dorsey has donated $3 million to 50 mayors in different cities in the US and told them, take this money and figure out what is a good universal basic income scheme for your communities. So
that's a great topic, universal basic income. I mean, I think that's going to happen no matter what.
I'm with you on this, Spiros. Without knowing exactly, the technicalities, my instinct is that it will happen with programmable money, and it will be customizable in regions. So it's not going to be like a big thing, where all Switzerland or, a whole country does it, but it will be customizable and it will happen. I don't know what your thinking is.
I haven't thought that way, but makes sense what you're saying. I just thought about the principle and as we see through AI, machine learning, automation, that this is the only way that we can support society in a way that we don't have a social unrest eventually, But I haven't thought about the technical part of it. I mean, besides of the technical part, besides of giving somebody money, there's also, as you said, if it's through blockchain or some digital currency, I believe the issue might be even more, how do we make it meaningful, their lives? Money is one thing, but we have to also keep people stay ambitious, people, there's
on a purpose, on something that inspires them.
Yes. So, but that's a whole topic in itself. And I'm not the last word of it, but I think it is an important topic.
Of course, of course. Shall we go back to fintech and maybe talk about, the other interesting part that, and you are much more familiar than I am, is the VC world, the venture capital world, and more focused on fintech there. And what change have we seen? I mean, I've been also focused on this amazing growth of SPACs in the US, and watching, what's happening in fintech there. I see that there are more and more rolling fund structures. What has changed? What have you seen over these years, and what do you expect in the world?
I think I look at it from a different way. I see that it's harder for fintech companies to get money if you're young. I think that's the issue that will happen. It's money chases already done investments. It's like or sure bets. I think it's the law. Venture law, I think globally, is not spread widely anymore. I mean, of course, there will be angel investors, which we've seen in any crisis. They come back when other people leave. Like in any crisis, we saw venture capital angel investments going up. But I think it will be harder for a lot of startups to raise this initial money.
The seed, the early stage will again be penalized.
Because you see always those big bets. The money goes, the volume is higher, but it's a more focused because they're going for the sure bets. If it's a sure bet, it's a different thing. But I think that's my observation. It's probably a few years ago when we were in business already, it was easier for fintechs with a good idea to raise funds. Right. It's going to be harder now, I think, much harder.
Much harder. And in terms of if we think of, retail fintech, or small business fintech, or B2B fintech, where do you see challenges and opportunities from the funding side?
I think B2B, I think B2B is not sexy as it is. I see it's like the place to be, if you have a good B2B solution, because it's like when people were looking many months ago for gold, you had to sell the shuffles. And I think in our space where there's terms that it's if you can sell the fintech shuffles to enable those startups to grow, that's a better business to be, I think, if you have something to offer. Because the other things, of course, they're sexier, but the chance of success is smaller. I mean, it's so competitive, it's so, it seems like if I would ask you now, would you start a challenger bank now?
No way.
But there still could be somebody coming that might be succeeding, but
Yes.
it's not the time of number 26 anymore, you know?
It's not the time.
You know,
But,
where you had a cool credit card and they did out of a credit card, debit card, they built something.
right, right.
As one example. I think it's very hard. I mean, it's like a lot of our industry is like WhatsApp. We could build a WhatsApp, the two of us, who could send the instructions to India. But the problem is nobody will join. You know, it might be better WhatsApp, but it's too late. But on the other hand, the nice thing about innovation is there's always somebody coming. You know, Google was not the first, Yahoo was before search, Facebook was not the first, MySpace was before. So I always believe there will be surprises out there that will surprise us. TikTok, not a fintech, but you know, it was so close to YouTube and everything which is there. So it would be very hard to imagine something new coming, but there's always something new coming. That's the nice thing about our business. But I think what we see now with challenger banks, etc., if you do exactly the same thing as a number 26 does, Monzo, etc., it's going to be very hard to succeed because even they struggle.
Spiro, I mean, at the B2B level of fintechs,
yes,
I'm a little concerned that wherever, you know, there's a smell of API, money flows in. Oh, you know, there's a craze there going on.
yes.
What I'm afraid of, and help me on this thinking, is the systemic risk to the system, meaning that if all this rebundling is enabled through a huge API mess, I would call it, or mesh, whatever, right? How are the regulators going to deal with this? Because we have already many financial services providers that are not regulated or have, you know, very light licenses. And if this thing goes on, could we have a systemic risk event and then, you know, go to the other extreme where regulators break up everything? And in general, this regulatory clampdown that started with Ant and now is
I
also...
think that could happen to us as well, because at the end, it's beautiful. I haven't, you know, you're the first one who mentions it, you know, but it makes a lot of sense what you're saying. You know, it's. I think things might go so wild. Things go much faster anyway, as regulators feel much faster than regulators feel comfortable with. Goes without saying.
Exactly.
It's like they're driving this extremely fast car. They don't even drive. It's like, you know, when I remember when I went in the sports car, and a very fast sports car, and I was sitting next to it. I wasn't driving, and a professional driver was driving. Call it fintech, and I'm the regulator. I got sweaty hands because first I didn't have control and things went really, really fast. But the guy was in control. But who knows? Something could happen. A tire could explode, something. And I'm off the curve. Going back, the same thing here. I think what we see in China is, I think in the old days you looked at America for innovation. We know now we have to look more to China for innovation. And we also have to see regulatory-wise, this clampdown, maybe it has to happen eventually. It's not a nice, or at least slow down and take a breath and see, hey, where do we stand before things implode? Because I know, I mean, all these APIs, it's nice, the idea, but it's there are a lot of doors to a house now.
Exactly.
A lot of doors, and I don't know if the people inside the house feel so comfortable. You know, and that could be a backlash for our industry, you know, fintech, because the incumbents could say, oh, look what happened to us, you know, through this. But you also know that people, big incumbents, are very reluctant to live the open banking. You know, they find their ways of. So in some way, this reluctancy and this kind of trying to stop this open banking approach and giving access to those other companies is, in a way, I don't encourage it, but indirectly, I feel like it slows down the innovation to a certain extent. so not a catastrophe will happen before. I mean, if they would have opened up all the gates as they were ordered, as the regulators want, maybe we would already had a catastrophe. But like indirectly, through their reluctancy, maybe it slowed things down anyway. You know what I mean?
That's a very good
I don't encourage it.
yeah.
But indirectly, they didn't even intend it. But indirectly, I think it gives us more time to breathe.
Yeah, it's what we say, you know, that sometimes free market forces take care, you know, of things, and that you're making a very good point.
I'm just thinking a little step beyond. I mean, besides because even if I don't like what's happening, that a lot of those incumbents are reluctant, but you know, that's not my job. That's the regulator's job to change this. But sometimes you also have to think of the side effects.
Yeah, it's
positive and negative.
Yeah.
What do you think is exciting in the fintech space? What do you see? What excites you now?
Well, what excites me now is really in that bridge that is not built between the decentralized world and the traditional world. And what excites me there is, again, seeing that there is true innovation because it's unregulated and it can go wild. In terms of manufacturing products. So, for example, I mean, if we look in the traditional world, fintech hasn't disrupted deposits, right? I mean, your deposit is your deposit, whether you're with UBS or Revolut or any other bank, right? And look at what the crypto world is doing. We have non-custodial wallets.
Mm-hmm.
So that's a completely different way of you know, the concept of deposit. Then you talk about what is interest, how is interest calculated, and how is interest earned. And you have all these new other ways through staking, through the lending.
But if you look at the interest, the Raisin, you know, the company Raisin, and there's another one, I forgot the name, German as well, they really made a great business out of it.
They did an amazing business.
Of innovating something that within the law, it's complex, but it's so easy for customers to switch to a higher paying interest rates account. I think that was.
That is.
Those people are not very flamboyant, not at all, but the product is very sexy.
It is. And I would love to go to them and to Raisin and see if they're open to add to their menu a deposit account that is nothing to do with crypto, but is run, is based on a blockchain infrastructure, and where you deposit US dollars and you earn 3%, fully insured by Lloyd's Bank. And the reason that you can earn that is because it's run on the blockchain infrastructure, and it has high-grade invoices. It's backed by high-grade invoices, 15-day invoices, and it's fully insured by Lloyd's.
Is Lloyd doing this already?
Yes.
I see.
The company that offers this is in Switzerland. So I really want to see if Raisin is open for this.
Yeah, maybe I should contact one of them and I mean.
So this is the type of innovation. I mean, there's the wild part, right? And we need the wild part, like you said, right? The experimentation.
Yes, and inspiration.
And inspiration, and see where things could go out of the huge percentage of scammers and people that are there just to flip, right?
Mm-hmm.
Flippers and speculators and so on. But in the midst of that, we do have some really genuine innovative ideas, and a lot of them are also around how to structure products like a fund, right? How to administer a mutual fund. We know that we can do it much better on a blockchain. Um, and those types of things, we're talking about changing the infrastructure in capital markets, that has to happen. Of course, it's a chicken and egg problem, because if we don't get it at scale, it cannot work, right?
Mm-hmm.
So
But you see in wealth tech, I mean, Robinhood is an old story now, but how Robinhood changed the brokerage fees. I mean,
yes, but
I
I'm
know how to do it. We all know how to do it. But nevertheless, for the end consumer, he doesn't really care. I think it seems they don't care, but it forced Charles Schwab to go for zero fee brokerage fees. It forces other players as well, and I think there's even Europe company, also now I missed the name, that goes that way. I think there's no free lunch anyway. I mean, people have to understand if it's free. It's much better if they would say it's free for you. We will charge somebody else. You know.
yes, I think
I
there
think that would be a more honest approach to this, because there's no free lunch.
yes, there has to be more transparency, and that is where. But I think that fintechs too, once they grew up, they forgot about the full transparency and saying, okay, we're doing this, it's free, but this is how we make our money.
And I think people will love that.
I think people love that, right?
I
Yes.
think so. I think as much as people love if you contribute some of your profits for good cause, planting trees as one company does, Bank.
Yeah.
And I think there's a lot of great inspiration now in industry, and I think we're still very early. I was maybe we're in kindergarten still, if we think of the life cycle. We're still in the kindergarten, or maybe elementary school of the innovation, but we're definitely not adults, because we still do things a little better than the incumbents should have done. But it's not like, as you said, it's not like, oh my God, this is so innovative. This is so,
Exactly.
we still think about banking, and banking should be like breathing one day. We should not think about it. But it will make us more stupid, because the less we manage our money, the less we think about our expenses, the less we think about a lot of things, and we let the computer do the thinking, which that's the direction we're heading anyway, the less we will understand what's really happening. Because somebody else will decide for us which savings account we're going to use, how much we're going to spend, and.
Yes, I think this is also, the argument voiced in many disciplines, in artificial intelligence, how humans will use artificial intelligence for fraud. Example, if you have, everything automated, then what is the role of humans, and how will they remain alert and smart enough to catch the next sort of wave of cyber attacks and so on.
I think that's the real issue. But the thing we brought today about the APIs and the B2B, that will definitely be also an issue eventually.
So
or maybe it's already an issue, we don't know it.
Yes, maybe it's already an issue, we don't know it, and maybe the regulators are smarter and they're stopping the Visa Play the thing because of that, although I doubt it at all.
I doubt it too.
Yes, Spiro, to me, it resembles, during the 2008 crisis, the subprime crisis.
Mm-hmm.
After that, everybody was talking about the web of debt, the interconnected web of debt, because of all the structured products. And I've always, lately with all these APIs, been thinking, is it possible that we are creating unknowingly an interconnected web of APIs that can, blow up and be complex? And I'm not sure that regulation is the answer, but we need to have a transparent way of checking the system, or the surveillance of the system.
I think, but here you bring also a good point through this discussion. I think regulators should talk to thought leaders, to industry leaders about these things, but in an unbiased way.
Yeah.
Because if a fintech company goes to a regulator, obviously he wants to talk his book, how to improve his business. But it should be more like a think tank, not only of regulators, but also what we discussed today. I think, and to make them start thinking, oh, wow, did we cover that or not? Or if not, what can we do? I think it needs like an organization that, not a political organization, but it needs an organization where such thoughts are exchanged. Because I think, obviously, I mean, I look at BaFin. I mean, we all make mistakes, but a lot of those BaFin regulators were invested in Wirecard. So the moment you invest in Wirecard, not because it blew up, it can happen. It can be unbiased. Exactly. I mean, so basically, it seems like for some of those regulators, things go too fast. But I'm glad we have them, because if we didn't have them,
of course,
it would be Wild West. And even what happened in China, I mean, I'm a little bit surprised, but that it happened. I think what happened there is the government all of a sudden realized, hey, if we don't stop it now, those people are going to be more powerful than we are.
That is so true.
I mean, that's not that they said it, but it's obviously. I mean, it's like God. They give it to you and they take it from you. And in China, I think there's no billionaire. They're just billionaire because they want them to be billionaires and they do a good job. But at the end of the day, they can do whatever they want to do. I think that's the other extreme.
That is the other extreme.
But it amazes me what they do there in fintech space. It amazes me, but it amazes us all. But it's a different culture. And I also believe that a lot of Chinese fintech will not succeed in other countries because it's a cultural thing, But they will succeed by buying other fintech companies. And at the end of the day, they will infiltrate slowly, but they're not going to infiltrate as pure Chinese play. I believe that. Because you see WeChat, etc., used Alipay, but it's mainly used by Chinese people who travel and want to pay like that, outside of China. But I don't think a lot of Europeans or Americans will use Alipay to pay a lot of things. Not because it's not good.
Yeah, Spiro.
Alternatives.
I mean, some of the big players there, like Tencent, right? They have a huge investment portfolio internationally. They're like a VC, right? You know that better than I do. I mean, from Nubank in Latin America to so many other investments.
That supports my thinking. Okay. That they understand that it's better for them to invest in those companies instead of trying to force their kind of fintech to other countries.
Yes. And of course, they have Southeast Asia to expand, which are huge markets, and they can do it much easier than, in the West.
It's like China is like an innovation hub for them. That basically, it's like where innovation happens, but of course they're not going to stop. They're not going to stop in China alone. I mean.
Yeah. I think, Spiro, we have to do this more often, because I feel that by playing a little, discussing with you and sharing it, of course, with our audience, we touch upon issues that are important, and we make new connections and come up with new insights. So
actually, I can agree. I couldn't agree more. I mean, you made me think about certain things today that that will make me think further to explore more. And thanks a lot for your time and inspiration, and
Thank
for
you.
having me.
Thank you, Spiro, very much. Let's wish everybody to be safe and sane. And the holidays are coming soon, and we'll definitely be talking more about what happened this year in FinTech and what we expect, right?
Yes, I think so too.
Thank you so much,
Thank
Spiro.
you very much.